Hello, hello, hello. Microphone check. Can you guys hear? Welcome, welcome. Give me one moment. I want to make sure all the audio is working for you guys. There's always something over here in the studio. It's working good. All right, we got the headset today. All right, so welcome. Today we live on Instagram. Let's talk about commercial real estate today. That sound good to you guys? Commercial real estate. All right, here we go. Moving things around, getting adjusted. There's always something going on. Commercial real estate. By the way, I do want to say, sometimes drawing with these things gives me the chills. I do want to say congratulations to our JV partner, Anastasio. We just closed a wholesale deal in Corpus Christi. Smooth, easy. He had the buyer lined up, got the deal under contract, got the deal wholesaled, and just put a check in the mail for him. If you do have any deals that you want to partner on, make sure you submit them to us. Reach out to me or Matt, and you can also submit them on our website, TeifkeRealEstate.com. Go to the Investors tab, click Submit a Deal. How does this look? I feel like it's really dark. Can y'all see okay, or is it? Are we? There we go. That's a little better. All right. So commercial real estate. Uh, what's the opportunity? Well, right now, there's a lot of people who have bought some deals that go check it out. There's a lot of people who have bought some deals that need to sell right now. Matter of fact, a guy just came in. We went and viewed his 60-unit apartment complex in Colleen, I don't know, 3-4 months ago. He's trying to sell it, he and his partners. Great property. Great property, good location, good tenants. They fully remodeled every single unit. I think we did a vlog on it. You could probably go check it out on our YouTube channel. But it's a great property. They had to get a hard money loan, second lien position, in order to finish some work on the deal. There was like 20 or so units that needed to be fully remodeled. They were down to the studs. I still feel like it's really dark. Yeah. So, anyways, they needed a hard money loan, and they got one. It's at like 12, 13, 14%, maybe even at 15. I forget. But they got a second loan on the property to finish up some work. It wasn't enough in order for them to finish all the work, so they had to get another investor to come in. They also had on their first loan, that interest rate had risen to today's interest rates. It was adjustable rate loan, and so it's making it really hard for them to hold on to this property and lose money every single month, because the rents are not supporting the debt service that they have, along with all operating expenses, taxes, insurance, management, maintenance, etc. Um, in any ways, they were trying to sell it back then at like a 5.5 cap rate, based on pro forma numbers, not what it was currently doing. And so it made it really hard to be able to get debt on the deal in order to get a deal done. Well, they're still holding on to it. It was or is listed with a broker, and they are still trying to sell it. But they did get somebody to come in with some extra capital so that they could finish up the renovations. And then I think what they're really hoping to do is just refinance into some debt that works with their NOI so that they're not losing money. But these are situations that people are in right now. A lot of these commercial real estate owners who bought apartment complexes, retail, industrial, maybe storage units, mobile home parks. If they bought at a time when rates were really, really good, and if those rates are no longer good and they're forced to have one of today's interest rates, they're likely going to be losing money. And if they're losing money, they're likely not going to want to continue to hold on to the property, nor will they be able to. So they have to figure out a solution. And that's where and we come into play, and we can hopefully provide a solution to these people, buy the properties from them, get them out of the situation, and continue to own these properties for a long time. Now, if we do that, though, the sellers are gonna have to take a loss, and they know this. The sellers are facing trouble right now, and they need a solution. One of the solutions that these sellers are running into is or that they're trying to figure out. This is usually the first thing they try and do, is they're trying to get outside capital to come in. So they're looking for more investors on the deal so that they can raise 300 grand, 500 grand, $1 million, so that they can buy down the rate cap. They can buy down their interest rate into some debt that will work, so that they can cash flow for a little bit until rates get better, maybe 2, 3 years where they can refinance. That's what they're trying to do. Now, they're either A, trying to raise capital on the equity side, or B, they're trying to get people to give them a loan. And for the loan, they're offering like 12% interest and other things in order to hang on to the deal. Because if they have to sell these deals, or if the bank takes it back, they're losing a lot. So they're trying to do that right now. It's kind of like the first inning. They know that they know what's on the horizon. They know what's coming. They know that they need to get a solution in place, and so they're trying to solve for it. Um, but they may not be able to. Second thing is they're going to have to sell these properties. If they sell these properties today, they're not going to sell them at the values that they want to sell them for. They may sell them for less than they actually bought the property for. They may lose all the equity that they have in the deal if they are forced to sell. Why is that? Well, assuming NOI has remained fairly, similar from when they bought it in 2020, 2021. Sure, maybe it's raised some, uh, but if they bought it at a 3, 4, 5 cap, and they're having to sell it at 7, 8, 9 cap, they're going to be selling at values that are way less than they bought it for. Now, what are some ways that they're trying to combat that? Well, if people are trying to sell right now and they have debt in place on the deals, at a lower rate, or if they own it free and clear, um, and they want to sell at these higher values, some ways that they're trying to combat that is via seller financing some of the deal, or if they have existing debt that's in place, they're trying to get people to come in and take over the existing debt. Now, the downside to doing that as a buyer is, depending on what price they want to sell at and what principal balance they have in place for the loan, it is going to require a lot down. So it's likely not going to be 20, 25, 30%, 35% down. It's the ones that I've seen that are offering this as a solution are coming in at about 50 plus percent down. Now, in order to make the deal work, that can happen, and if it's a good asset and the numbers make sense, then great. But you know, we always like putting as little down as possible in order to experience greater returns, right? So you just kind of got to weigh it based on what the deal is and what the numbers are showing. If they do own it free and clear, or if they are offering some sort of seller financing, it's kind of the same scenario. There's this deal here in Austin. I think it was 38 units, something like that, and they were based on actual financials, it was like a 2.5 cap. It didn't look great, but it did have room to grow and change those numbers. But going into it, that's what it looked like. Um, and what they were doing was they were offering, I think it was like 50% financing. They were willing to seller finance about $2 million of the purchase price, but they wanted like 2.4 million dollars down. And it didn't work with that deal. But these are the things that people are doing right now to avoid, having to sell at the prices they probably should be. And this is where creativity comes in, and creativity wins is by coming in, looking at all these deals, remaining open, and trying to figure out a solution. And then worst case scenario, these sellers don't sell, and the bank takes back the property. Now, I don't know how much of that will actually happen because uh, I don't think the banks want these properties, and I don't think they want to take them back and then try and resell them. So I assume that the banks are going to do everything in their power to work out deals with these owners in order to figure out a way to restructure the debt and make the deals work. That way, they don't get foreclosed on, and the bank doesn't take back these assets. So, what are we looking for right now? Well, number one, we're always looking for opportunity. Is that how you spell opportunity? We're always looking for opportunity. We're looking for opportunity in multifamily. I can't tell you how many deals we've looked at and made offers on recently. We got our first shopping center. It's a small 9 unit retail shopping center in Pace, Florida. We got this under contract. I really like this. Um, the numbers look great. We're coming in. This isn't my favorite in terms of the location, and the uh, asset itself needs a little bit of work, but the numbers look really good on it. I mean, this guy reached out to us on our website, said he wanted to sell. Similar scenario with this guy. We talked about this last week, but for those who didn't get to hear it last week, Bandit's excited about it too. For those who didn't get to hear about it last week, it's a 9 unit shopping center in Pace, Florida. We got it under contract. 1.45 million. Currently brings in about $135,000 in net operating income. Those are pretty good numbers. Going in, it's about a 9.3 cap rate. Pace, Florida, traditionally sells at around like a 7 cap. Market rents in the area are about $19 a foot plus triple net. Right now, sellers got him at 18 a foot, and he's not expensing the triple net to the tenants. So there's opportunity to come in and, at a very minimum, expense back the triple net to the tenants and increase NOI from 135 up to about 180. And then when we do that in 2024, this deal becomes so much better. It was already good at 135 NOI, but expensing back the triple net makes it a home run. So the shopping center, Pace, Florida's got about a population of 26,000 people. It's north of, I always forget this city, Pensacola. It's north of Pensacola, Florida. It's right there on the border of Florida, northwest. But good little city, good little town. There's opportunities there for deals like this. But it's the first shopping center that me and Matt have gotten under contract, and I really like it. I really like these numbers. We'll see how it plays out. We'll see if we like owning them. But it looks really good. We got Chick-fil-A as a training center, as a tenant. So that's a good sign if Chick-fil-A wants to be there. A lot of the tenants have been there for 7+ years. One's been there for 17 years. We looked at the pizza place last week. But anyways, that's an opportunity. The seller needs to sell. He doesn't have it listed with a broker. He needed some equity out of the deal earlier this year. He and his partner refinanced it into a hard money loan, and that just jacked up all the numbers. I mean, their interest rate's about 12%, so they're losing money, right? So they need to sell it. They've owned it since 2008, and they've done a pretty good job owning it. But anyways, opportunity, shopping centers. I really would like to look at some storage units. We love mobile home parks. There's a there's a mobile home park we looked at last week with an entrepreneur community member, Mr. Rick Stein. I forget where that was, what city in Florida that was, but it's right near the water, uh, on Gulf Shores, and that one looked pretty good too. So we're exploring that one further. But looking for opportunities that fall within this or anything else. We've also got a um, property we're developing in Kingsville, or redeveloping with our partner James Matalone with Matalone Development. This was an old elementary school that city of Kingsville, had, and it's been run down and vacant for a while. And we identified this property um, and have a plan to redevelop it into retail with some restaurants and other things to bring to the city of Kingsville, right near A&M Kingsville. Um, I did some research on Kingsville yesterday, and I didn't realize that Kingsville is actually right outside of the infamous King Ranch, and that's where it comes from. Is King's Ranch, and good little city in South Texas. There is a lot of opportunity with that deal. We're buying it at the end of this month, and then we're going to be putting about $3.5 million into the development of it, get it leased out, and bring some good tenants and a good place to the residents of Kingsville. So these are the opportunities we're looking for. We're also looking at stuff on the residential side right now. I mean, if we can figure out ways to sell our finance deals, take over subject to debt, and buy deals in creative ways, there are deals to be done. Go ahead. Uh, Whatever we can get, local banks, like in Pace, Florida. I'm going to reach out to some local banks, see if they have an appetite for it. Really, we just kind of work with the commercial brokers and allow them to, the mortgage brokers, and just allow them to market it out and find us a lender that'll do the deal, uh, and just kind of trust, whoever they send. But ultimately, that's what we're doing, is just working with a mortgage broker, allowing them shop it around, bring us a few options, and find a deal, find a bank that'll work. All right, so there's a lot of opportunity right now. You want to be out there analyzing deals. You want to be making connections. You want to be making offers. You want to be finding partners that you can do these deals with. There's a few things that you should be doing right now to take advantage of the opportunities that are coming. Is what do we want to call this? Here's what you should be doing right now. Can y'all see this? All right. Oh well. Action steps. So number one is build relationships. You need to be building relationships. You need to be talking to investors. You need to be talking to sellers. You need to be talking to commercial brokers. You need to be talking to mortgage brokers. You need to be talking to your insurance agent. You need to be out there building relationships with all these people, property managers, because you're not going to do these deals alone. You're going to need partners. Even if you got all the cash yourself and you're not going to go raise capital from anybody, you need a mortgage broker, you need a property manager, you need contractors, you need the real estate brokers to help you out. So get out there and build relationships. All the deals are going to come from other people. You need to be out there and you need to let them know what you're looking for. and uh, and find more opportunities. Number two is look at deals, analyze deals, and make offers. Analyze deals slash make offers. You're never going to get a deal if you never make an offer. Don't get caught in analyzing these deals over and over and over and over and over and never actually make an offer. As you get out here and you're building relationships with people, you need to make offers. You need to learn how to underwrite and analyze deals quickly, and see if it makes sense or not. That Pace Florida deal, you know, I could look at it very fast and figure out if it was going to cash flow or not. Now, what I didn't know is Pace Florida. If I saw those numbers here in Austin, I'd know instantly how good of a deal it was. But I did not know how good of a deal it was in Pace, Florida. You know, is this subpar for Pace, Florida? Is this on par for Pace, Florida? Is this above par for Pace, Florida? So what I did was I looked at the numbers. I started making some connections. I started building some relationships and reaching out to people who were local in Pace, Florida. I reached out to local bankers there. I reached out to property managers there. I reached out to local brokers there. And I told them, hey, look, I got this deal under contract. You know, here's what we got it at. Here's what our plan is. Here's what we intend on doing. Here's how I would like for you to come in and help. What do you think about it? You think this is a good place? Every single person I talked to, the title company, you know, when I had it under contract, sent it to the title company. You know, I'm talking to her about how I'm from Austin and I don't know much about Pace, Florida. Tell me about it. Do you like this property? Do you like this location? Do you like the area? Just gathering information, right? Building relationships. So even though I was able to look at the numbers very fast and say, okay, these numbers work, I needed to next figure out if Pace, Florida was a market we wanted to be investing in, and if the numbers for this deal made sense in Pace, Florida, even though they make sense here in Austin, which is much more competitive than Pace is. um, but I made the offer. We gave him what he was asking. We didn't really try and fight too hard on negotiations initially, but we gave him what he was asking. He wanted $1.45 million for it. But what we did negotiate was enough time to be able to do our due diligence and make a educated decision on if we should buy this or not, right? I got us 100 days of due diligence period. No money is non-refundable. It's all refundable. I put up the earnest money, and if we back out during our due diligence period, we get all of our earnest money back. So zero risk for tying it up, making the offer, taking a look at it, and then we have enough time after due diligence in order to be able to close. So even if the numbers didn't work, making that offer there, locking it up, and not wasting the opportunity by staying in analysis paralysis, even though I wasn't 1000% sure that Pace was good and the numbers were good for Pace. I knew that we had a free look at it and it was worth a shot. So build relationships, analyze deals, and make offers. And last but not least, and this is kind of with building relationships, but build a great team. You're not going to be able to do all this alone. We are going to raise capital in order to buy this deal, allow people to come into this deal and buy it with us. These numbers on Pace, Florida are great, but we're also buying it with our partners. And one of our partners, Jason, he buys these all the time, these shopping centers. He knows what to look for. He knows the game plan, how to execute. He knows the lenders, and he knows what to expect, right? So build a great team, because I'm not doing this alone. Matt's not doing this alone. Me and Matt aren't doing it, just us two. We constantly have to add to our team, have a good team in place in order to do this at a high level, and we feel like we're not even close to doing it at the level that we want to be doing it at. So the team's going to need to get much bigger, much more efficient, much more organized, and all around just be a better team. So look for these opportunities, build the relationships, analyze the deals, and make offers. I can't emphasize this enough that you got to just step up to the plate and swing the bat. Make the offer, build the relationships, analyze the deals, but don't just continue to sit on the sidelines because if you never get in there and play, you're always going to be on the sidelines and you're always going to be left out. You also don't have to do this, back to building a great team. You don't have to do this alone. If you don't want to be the person out there who's actively looking for deals, who's actively managing the deals, who's building the team, who's building the relationships, who's analyzing the deals and making the offers, you can invest passively in people's deals. You can invest in REITs. There's a ton of syndications out there, all the stuff that we've put together. You can be a passive investor and still experience amazing returns. You don't have to oversee everything on the active side of things. And as a passive investor, you have less risk than the general partners do, and you'll still get really great returns. So figure out, what's best for you. If you don't want to be all in on real estate and actively managing these deals and finding them and everything else, just be a passive investor and invest alongside people like us or others out there who are doing the same thing in order to not miss the opportunity and take advantage of the assets that everybody's looking at buying. All right, what questions do we have? Not on Facebook or anywhere else. What'd you say? A loan question? Yeah, well, it depends. I mean, debt right now is not looking so great. It's what are interest rates at today? Interest rates are at what's prime rate? Let's look this up. Prime rate today. 8.5 still. So prime rate still at 8.5 right now. Some banks like your local banks are typically doing like prime plus one, meaning that the interest rate that you're going to get is the prime rate 8.5 plus 1 percentage point, which is 9.5. So that would be your interest rate. For multifamily, if the deal fits, meets all the criteria, and so do you, you can get agency debt. Uh, those typically have the best terms, best interest rates, uh, but you have to make sure that the property qualifies and you can get it. So there's a lot of different loan options out there. Um, I'm not the expert in loans, nor do I necessarily want to be. I really just want to get as good a debt as we possibly can on this, which, you know, right now, if we could get a 7.5, 8% interest rate, that would be amazing. When 2 years ago, that would be the interest rate of a hard money loan. When hard money loans today are probably coming in at about 12%, depending on uh, what your experience level looks like and what type of loan you're looking at. We just closed on we are closing on a hard money loan today for just a bridge loan, and that's at 9.99% interest only, 12-month term. So there's many different loan options out there. I would suggest that you go reach out and build relationships with a mortgage broker. That way they can do all this work for you and find a good loan option that'll work given the property and everything else. But there's a lot of options out there, and it is possible to make deals work with debt today. Like Pace Florida, that deal, I don't think it'd be wise to buy that cash. I mean, you could, I guess, but if you can still make the deal work with a 9% interest rate, 8% interest rate, get, uh, put about 450, $500,000 down versus the entire 1.45 million. And your cash on cash is better, your leverage is better. Real estate is a much better investment when you got debt. It's one of the biggest benefits to buying real estate is utilizing debt. So if you can make these deals work with debt, then it's likely that you're going to get a much better return than you do if you buy it cash. Pace Florida, buying it cash, based on its cap rate, which is what your return is if you buy it cash, is 9.3%. And then even after you raise the NOI and pass back the triple net expenses to the tenants, now you're at 12%, 12 cap. But with the debt and putting down a third of the purchase price, raising the NOI, your cash on cash is somewhere around like 17%. So it always, if you can get debt on the deals and you can make the debt work, your returns should be much better than buying cash. And you can also buy a lot more properties because you're not using all your cash to buy the real estate asset. Yeah. Uh, Say it again. Yeah, I'll explain using debt to purchase. So this is what I mean. Purchase price is 1.45 million. We are going to put down payment 500 grand, and then our loan balance, this is the debt portion, is the loan, the mortgage you get, is going to be what, 950,000. And so the loan balance is the debt. That's your mortgage. Does that make sense? Just like when you buy a house, just like when you buy anything, the debt is the loan that you're getting in order to buy it. So if you can make the debt work, the returns are typically a lot better than buying it cash. Real estate, if bought with all cash, is just an average investment. Real estate with good debt is a great investment. The returns are much higher. You're utilizing leverage. You're able to grow and scale it, and you're able to push the returns higher than they normally would be buying the property cash. Does that make sense? All right, good. If you have any deals, I did want to mention to you. Let me show you. Again, congrats to our buddy Anastasio. We Anastasio. We just closed on the wholesale deal today. Put his check in the mail. But if you have a deal, go to our website here. We want to partner with you. You can bring the phone around and show Instagram. I'll just show them. So go to our website here. Click investors. Click submit a deal here. And then it'll ask you some questions. It'll ask you your name, your email, your phone number, address of the property, how the deal was sourced, what the seller's motivation is, how we can make a profit together, what the asking price is, after repair value, repair estimate. What is the story of the deal? What's happening? Why do they want to sell? How can we make money here? Is it under contract? Yes or no? And then if you have a contract, you can attach it here. But if you don't have a contract, just insert a picture or something of the property. Then you click submit, and our team's going to reach out to you, and we're going to figure out a way to do this deal together. So if you have a deal, submit it. Actually, I'm going to hold on to this, guys. If you have a deal, submit it right here so that we can partner, we can do deals with you. And then I also want to show you this. For those of you who are ready to come take action in person December 1st and 2nd, we got the Entrepreneur Real Estate Workshop going on in Dallas, Texas. This is going to be a 2-day, fully packed event with Matt and I running it, working right alongside you. We're going to be showing you how to find deals, where to find deals, how to put deals together, the steps of getting the deal done from A to Z, how to get good debt on deals, how to structure these deals, how to analyze the deals. Commercial real estate. We're going to look at wholesaling. We're going to look at buy and hold, seller financing, fix and flips. We're going to show you the formulas for these and how to see these deals all the way through. We are going to show you how to get debt on them, how to find the right loans for them, how to make the deals work, how to analyze them, how to build a great team of lenders, property managers, contractors, partners, investors. The list goes on. It is going to be 2 days, fully packed event. Me and Matt working these with you. This is not just going to be us teaching a class. This is going to be a live interactive workshop. Hopefully you leave here with your first deal. We'll help you analyze them. We'll help you negotiate them. We'll help you get them under contract. We're going to be doing this live with you. We have 3 ticket tiers available. Oops, early bird prices have ended. It's already gone. If you did get your early bird ticket, congratulations, but those are now gone. But we have general admission, executive, and VIP. General admission, you get access to the event. I guarantee you're going to get way more than $197 worth of value there. The executive ticket, you get exclusive access, you get some seating selection and better seats, and you get access to the after hours networking mixer. The VIP, you get the best seats in the house, you get exclusive access, you get access to the after hours network and mixer. You also get lunch provided during the networking VIP lunch and the best seats available. We do have a hookup for hotels if you are looking to book a spot and you're not from DFW. But these are all the things we're going to be going over here live at the workshop. It's also going to be an invaluable networking opportunity. There's going to be investors, agents, wholesalers, deal finders, passive investors, everything. Easily, you could leave there if you network with everybody with $1 million worth of value just in the network that you're building. So if you want to be there, secure the spot. These tickets are running out pretty quickly. Early bird prices did just end, but you can still get a discount here coming right to the website and avoiding paying the retail price. Just pick which one you want, click add to cart, and you're good to go. We hope to see you there live at the workshop. We have a webinar that we're putting on in about 20 days, right? We got a webinar that we're putting on in about 20 days. You don't want to miss that. We'll be putting some stuff out there. Reach out if you want to get a deal done, and we will see you next week.